Ontario Teachers Pension Plan, or Teachers as it's commonly referred to, is Canada's largest single profession pension plan. Teachers is at the forefront of an industry shift or industry movement of large institutional investors investing directly into private equity transactions and building the in-house capabilities to do so, with a goal of providing their members with lower cost and more control over the investments. We are joined now by Jim Leech, Head of Teachers. Welcome, Jim.
Thank you.
Jim, the whole subject of large institutional investors moving aggressively into private equity via a variety of strategies is a relatively hot topic right now. Now, when you joined Teachers in 2001, there was already pretty sizable private equity operations underway of around $2 billion, if I recall correctly.
Yeah, there was a good platform had been built over the previous decade. And as you say, there was approximately $2 billion investing, and they had some, they'd been quite successful. By the time I got there, there were some funds in Europe and in the United States, and they were doing direct investing in Canada only. And so I expanded by taking the direct investing model down into the United States and then subsequently taking it to Europe. It was an interesting time because a pension plan investing in this area and trying to take on the likes of the big people, big successful KKRs, Texas Pacific, Bain, all of them, was pretty novel. And also pension plans, particularly in the United States, didn't have the credibility of being a sophisticated investor. I mean, it was, I used to say that I would walk into a Wall Street office and say I'm a pension plan, and all they could see was dumb money. And so I spent a lot of time walking the halls of Wall Street saying, no, we're exactly the same as KKR. You've got to treat us exactly the same way. And eventually we got there.
Obviously the model of direct investing is very different from the traditional investing through funds managed by general partners. Now, from an internal perspective, what are the factors required with respect to corporate governance and culture to enable, so that a private equity direct investing unit can thrive within a larger asset allocator, asset manager?
Sure, well, that's always a challenge. Fortunately, Teachers from the beginning was set up with a very good governance structure where you had board of directors delegating the authority through the chief executive officer and down and delegated down. So as the head of Teachers Private Capital, I really had a lot of degrees of freedom to build the team the way I wanted, and the types of people that I'd hire and the types of business we would carry on. So we had that freedom, albeit within an institution that has controls and all the things that you need in a large institution such as we had. But it really was a matter of going out and trying to recruit people to join us as opposed to joining a private equity fund. A couple of the advantages we had is, number one, we didn't have to go raise money. If you join KKR or whatever, you've got to go raise the money. In this case, you just picked up the phone and the money came up the elevator from the 6th floor, and it was pretty simple. So that was one of the challenges, or that was one of the advantages. The other advantage is that we had a different time frame than most of the stereotypical private equity funds. Private equity fund, they say they invest for 5 years and then liquidate. Statistically, I think it's more like 3 years. And the reason is that they've got to show an exit, a disposition, in order to have the returns to be able to raise the next fund. In our case, that wasn't what we were interested in. We were interested in returns for the long term.
Understood. Nevertheless, despite all Teachers' focus on direct investing and the undoubted success, you still invest about half of your stream into private equity via the traditional fund model, right?
Yeah, today it's about 50%. It's bounced anywhere between a low of a third to a high of 50%. It all really depends on dispositions that we might have made out of our portfolio. In 2012, we made a large number of dispositions, so at the end of that year, statistically, it was about 50-50. My sense is over time it'll go back to the 1/3, 2/3.
How do you select funds, first of all? Is there any difference to others? And then what are the interferences or potential conflicts of interest with the direct investing side? Are there any? I mean, how do you manage that?
Basically what we say is to be eligible fund for us to invest in, they really basically have to bring us a couple of things. First of all, is access to either a market that we couldn't access efficiently ourselves. So, and that market could be a geography, or it could be an expertise. I mean, it could be a particular industry, etc. So that's important. Secondly, they have to be a high performer. So as a standalone investment, they've got to make a lot of sense. And thirdly, they've got to be prepared to co-sponsor transactions with us. So if they see a transaction that is too large for them to do on their own, the first call will be to Teachers Private Capital. It won't be to another competitor in the industry. And we then co-sponsor it. So those three things are important. We keep it limited to a few, largely because we don't want to be investing in two different funds that will compete with each other. And also we don't want to be competing with them ourselves. So it has happened a few times over the last 20 years that we have been on the opposite sides of a transaction, but it's quite rare. We manage that pretty carefully.
Teachers has very large exposure to alternatives, not only private equity. What is the fundamental philosophy for that kind of approach, and how do you manage risk in the portfolio overall?
Yeah, it's funny you use the word alternatives, that these things are all now mainstream. I mean, they were alternatives when we first got involved. I mean, we are the first pension plan that bought an operating real estate company. We're the first pension plan that got into infrastructure. We're the first pension plan that got into derivatives and commodities, etc. And it was pretty exotic at the time, but today that's pretty normal across the spectrum. What we're obviously looking for is diversification. We're looking for asset classes that are not necessarily correlated to each other. We're looking for higher yields at reasonable risk levels. Now, how do we handle the risk side? Teachers operates on a risk allocation basis. So we don't allocate dollars to each of our various asset classes. We allocate risk. So every day we measure the risk levels throughout the entire portfolio across all $130 billion in assets that we have now.
Jim, many thanks for your time and your insights. It's very nice to have you here.
Good luck.